In this video, I'm going to be talking about the different types of financial advisors. If you've researched this, you're going to run into a lot of articles and information that talks about the different types of financial advisors based on their certification. Are they a CFP? Are they a RIA, a registered investment advisor? What type of financial advisor are they? What kind of credential do they have? That's usually the information that you find. This video, as you might see here often, is different from the information that you're going to find elsewhere. That's because this information is unbiased and I'm not a financial advisor, so I can just say what I've learned about this in the past. And this is information I really wish I had known when I hired financial advisors over 2 decades ago. I didn't know this, so that's why I'm sharing it. So I'm going to share with you the real, true, different kinds of financial advisors. And this is more about how financial advisors work, how they're going to invest your money. You may think they're all the same, or you may be unclear about that. I find a lot of people are unclear about it. They don't understand that I'm a financial coach. So I'm someone that might help someone decide, do you want a financial advisor? Or would you be better off hiring a financial advisor? Or how can you find a financial advisor? And is this a good financial advisor? Whereas a financial advisor, I refer to that as someone that invests your money on your behalf. And that's common practice. It's not really the true definition of a financial advisor. That's anyone that can give advice about investing or talk about investing. There are all kinds of rules and regulations around all of this. So I don't want to get into a lot of detail about that. I want to jump into the different types, the real different types of financial advisors, so that you understand if you are working with a financial advisor, what kind of advisor you really have relative to what's available out there, as well as if you want to hire a financial advisor, what to ask them during the interview process. And I think you'll find this information helpful. I've helped some of my financial coaching clients with this, and I find that there's confusion around it. Okay, so there are 4 major types of financial advisors. And the first type of financial advisor is what's called a strategic financial advisor. Most financial advisors are strategic financial advisors. And let me say that there's nothing wrong with any of these types of financial advisors. And let me also throw in really quickly, I'm not anti-financial advisor. I think the important thing to do is what you need to do in order to reach your financial goals. And sometimes that means working with a financial advisor. They can bring expertise that individuals don't have, and they have a whole research team behind them. Now, having said that, I don't use a financial advisor anymore, but I've been doing this for over 40 years. And I also use a professionally developed strategy that I implement myself because I've learned how to do this, and I talk about it in another video. So you can check that out. It's called the Allocate Smartly Review video. Okay, so the strategic financial advisor, what that financial advisor is going to do is use the assets. They're going to choose assets and put them in your portfolio to achieve the growth that you want or need, and they're going to use those assets to manage risk, and they're going to hold those same assets no matter what happens in the economy or what happens with interest rates. They're going to decide what percent of stocks and or bonds or possibly other assets, but it's usually just stocks and bonds, what percent to hold, and that's going to be based on formulas that have been figured out and researched thoroughly, and that will be based on your age and your risk profile. Okay, so that doesn't change. Now, the time it will change, so let me give you, say they put 60% in stocks and 40% in bonds, for example. And that stays the same, okay, unless you have a major life change. Maybe if you go into retirement or you get married or you get another decade older, for example. Okay, so that stays the same. When it does change, though, is once a year at least, it has to be rebalanced back to those original percentages, because during the year, those values in stocks and bonds are going to go up and down based on what the market is doing, right? So they'll have to be rebalanced. And when they rebalance, that sort of is a good thing, because that makes you automatically sell assets that have gone up and buy more assets that have gone down. So that is a little bit strategic. This is strategic investing, but that's also a little bit of a strategy there. Okay, so that's a strategic financial advisor. So they buy and hold the asset classes, usually stocks and bonds, based on your age, your risk profile, and that doesn't change no matter what happens in the economy, no matter if assets get overpriced or undervalued or different things happen. They keep that asset allocation, those percentages, the same. All right, that's strategic. Okay, the second type of financial advisor is called a tactical financial advisor. There are different terms for this. Sometimes the term dynamic financial advisor is used, tactical. Sometimes I say proactive financial advisor. And a financial advisor that works in this way is going to probably also have a percent of your assets in stocks and or bonds, and probably also other assets in addition to just stocks and bonds, but not necessarily. And they're going to adjust the percent that you keep in stocks and bonds based on different factors that are presenting themselves as things change, okay? So there are three major types of factors that a tactical financial advisor would use to make adjustments in the amount of, say, stocks you own or bonds you own, or maybe cash that you have in your account, or maybe gold or real estate even. Okay, and those three factors are fundamental, and that's just like, what are the valuations? Does it make sense to own this asset class since it's gotten overpriced, for example? Or should we buy more stocks because there's just been a bear market, and even though our clients hate stocks, they're really cheap right now. So that's one factor that would affect the percent that they keep in stocks and bonds. The second factor is technical. And more, almost all financial advisors now actually, and investors consider technical factors when they invest, and that's simply price movement that's happened, historical price movements. So we can say, well, if this happened this percent of the time, then it's probably going to happen again, but it's very, very technical in nature, and it's gotten very technical. Analysis has gotten quite advanced, and you may see stock charts. I've done some videos on how to read a stock chart and what this all means, but technical factors can be something that a financial advisor uses. A great question to ask a financial advisor, your financial advisor, anyone you're hiring. And then the third factor that they might consider are macro factors in the economy, and that's things like interest rates or the growth in the economy and those sort of things. So that financial advisor, tactical advisor, is going to adjust the percentages in your portfolio based on one or more of these factors, depending on what it is they use. Now, you can already see just from these two types of financial advisors, whoa, these are things you need to know. If you work with a financial advisor, and even if you don't, these are great to know because you can define what kind of investor you are yourself. You may want to be a strategic financial advisor where you keep those percent assets no matter what, or you may want to be tactical. That may make more sense to you, to sell assets when they get overvalued, or to take certain positions in bonds due to interest rate changes. So this will help you no matter what kind of investor you are. Okay, so those are the two types. There's one more thing I want to say about strategic financial advisors. That was the first type. And you may be familiar with robo-advisors that are very popular now. These are platforms where you can just go in and answer a bunch of questions, and they put a certain percent of your portfolio into stocks, into bonds, etc. That's strategic investing. Robo-advisors are strategic, and the strategy that they implement is strategic, okay? So when we get into types of advisors, again, we're talking about how are they investing your money, not what is the label put on them, robo versus full service versus CFP, etc., but how are they investing your money? And this is super important. I would have given anything to have known this information, like I said, 2 decades ago when I first hired financial advisors. Okay, so now the third type of financial advisor is what I would refer to as a holistic financial advisor. A holistic financial advisor looks at your big picture. And while a lot of financial advisors, both strategic and tactical, say they do this, like they might say, okay, your home value, is going to be included in your net worth, and we're going to give you this big picture, right, of your net worth, and so we're holistic. What I'm really referring to is a financial advisor that will look outside of traditional assets like stocks and bonds, or things you can buy that are publicly traded, okay, like REITs for real estate, or ETFs, or those types, even mutual funds, those types of things. A financial advisor that will look outside of those assets and say, I think it would make sense for you to buy real estate rental properties right now because the cash flow is positive, and I see that you have this much money that's not being invested right now, or I see that you need a favorable tax investment, or I see that you need more income from your assets. So that is what I call a true holistic financial advisor. It's a financial advisor that looks at all types of assets. And I talk here about income generating assets that are not publicly traded assets, simply because that's what we did after we stumbled into early retirement, and we sort of ended up with this hodgepodge of investments, and that includes these alternative income generating assets because that made sense to us. A financial advisor that's holistic can decide or see if that makes sense for you, and some financial advisors will even help you. I shouldn't say help you. They will help you find, for example, real estate rental properties. If that's, I'm giving that example. That's not necessarily, please don't think I'm suggesting or recommending any of this. But that financial advisor can help you with the process maybe of analyzing the investment, and or some financial advisors that are more holistic even have products that are available for their clients to invest in. A financial advisor like Lance Roberts, who you may have heard me talk about here, he's frequently interviewed on Wealthion, the YouTube channel that I talk about. One of my favorite advanced YouTube investing channels is Wealthion, and Lance Roberts has some products I know for his clients that they can invest in. So some holistic financial advisors that go outside of just those real traditional stocks and bonds will have this. Okay, so that's a holistic type of financial advisor. That's the third type. And now we're going to move into the fourth type of financial advisor. Now, I want to say one more thing before I do that, and that is I want to back up because I want to throw out a couple of examples. Jeff Rose is a financial advisor that he says on his website he is more of a tactical financial advisor. And I say that simply because he has right there on his website that he adjusts the portfolio that's allocated into stocks and bonds based on macroeconomic factors or technical or fundamental factors. So Jeff Rose, I am familiar with him because he is in a community, a financial community I'm in, of financial bloggers and that type of thing. So I want to throw out Jeff Rose as being this type of financial advisor. And if you are a tactical financial advisor or holistic financial advisor that really and truly looks at assets other than just stocks and bonds and publicly traded securities, I'd love for you to email me. I would love to talk with you about interviewing you for this channel, and I'd like to get the word out more about tactical financial advisors and also holistic financial advisors, because I think that a lot of people don't understand the importance of this and what this brings to the table. Not that there's anything wrong with strategic financial advisors. I just find it's a little bit harder to find tactical financial advisors. Okay, so I'd love for you to email me. Okay, so the fourth type of financial advisor is a financial advisor that brings in options. Now, a financial advisor that brings in options can also be either a tactical financial advisor or a holistic financial advisor. There may even be a strategic financial advisor that brings in maybe a protective put, but typically not. Typically strategic just follows that fixed asset allocation without a lot of bells and whistles. And tactical financial advisors and also holistic financial advisors may use options, but here I'm referring to financial advisors that really almost always use options, or that's really a focus of their practice. Now, these are my categories that I came up with based on my own experience and expertise and what I've learned over the years about financial advisors, both working with them and as a financial coach. So, financial advisor that focuses on options may use options in two ways. They may buy puts to lower risk, to manage risk, especially in the stock market, and or they might sell covered calls for you. Covered calls, I've done some other videos on this. Covered calls allow you to generate more income from the stocks that you own or ETFs that you own than you can get from dividends, definitely a lot more than you can get from dividends, and that's simply selling a call option out of the money, and not necessarily out of the money, but usually for someone that's held stocks for a long time, they would sell an out of the money call so that that option doesn't get exercised. I'm going down a rabbit hole. I didn't mean to do that. I've got another video on covered calls. Okay, so you can take a look at that. So this is the fourth type of financial advisor. Now, one thing I want to say about this is the financial advisor has to be really good with options. I've had some financial coaching clients that have come to me and they were paying higher fees because the financial advisor was using options, and fair enough, it's more work. Certainly cover calls are more work. And she wasn't getting the results from paying those extra fees. In fact, he was doing a quite bad job with the options. So if you're going to use a financial advisor that does incorporate options, and a lot of financial advisors do now, this isn't some high risk speculative thing. Options are used to control risk. It's done in a lot of mutual funds, and a lot of financial advisors do this now. So this isn't some crazy type of investing. But if you are going to use a financial advisor that uses options, make sure that they know what they're doing. They're really good with using options. Again, if you're a financial advisor that's tactical or holistic or even uses options, please shoot me an email if you're interested in being interviewed. Remember, retire certain.